All right, good morning, greetings, welcome to another weekly outlook video. In this video I'll be doing things a bit different from what I've been doing in the past few days and 2 weeks now. Instead of only covering the NASDAQ, which I will get into in a moment, I'll also cover the dollar and two major pairs that I'll be looking at throughout the course of this month, and I guess I could say the remaining quarter of the year. So let's before I do get into the currency pairs, let's start off with NASDAQ. So on the NASDAQ daily chart, as per the previous weekly outlook, I was looking to see how much we respected this daily discounted gap, because NASDAQ was the weaker one of the two sisters, and I was actually expecting the S&P 500 not to tag into that gap, and we in fact did not tag into that gap. We still maintained this high. We maintained the volume imbalance coupled with this gap here, without tapping into the, relatively speaking, daily gap residing right there. So yes, SMT did hold the SMT. I guess let's do this correctly. So yeah, I know I'm looking at the CFDs right now, but those are the closest CFDs to the actual futures contract. I just brought it up in case you don't have the paid version of these, the delayed ones. These are the closest substitute: US 500F from Black Bull and USTEC .F right there, also from Black Bull. But let's go to the continuous contract of both of those right now. Since we've already seen what I'm looking at, let's pay attention to just the NASDAQ. We've already reached these objectives. We have accumulated in the previous few days, in the previous week actually. You could have skipped the entire week and not miss a thing. And now we've actually created a swing low right there within the daily gap. Personally, the lowest I would like to see this go is probably the opening price of the previous day. This would be the lowest I would like to see this go, because I believe all these unswept liquidity levels here will be cleared up very soon and very quickly. If this was a high impact news day, it probably would have done so on this day. But yeah, so that's my expectations for the week. I'm looking for this swing high to be tagged. Then going through that, we have the all-time high. But we should not neglect inefficiencies such as this one, residing just above the swing high here. So if you ask me where my TP is going to be next week, it'll be right here. Let's label that. And September Q1 target. I'm just gonna leave it as TP. But yeah, that's my drawn liquidity from the first week of the month. The next thing we should note is that we have a bank holiday tomorrow, being Monday, and technically should be a no trading day. But to be completely transparent and candid with you all, I will be hunting down trade opportunities. I'm not saying that I'll be forcing myself to take any trades, but if my setup does form, if what I'm looking for does form, I will look for opportunities to take the trades, because there's some weeks where you would find that Monday, Tuesday and Wednesday were the expansion days. Then you'll get Thursday and Friday, the Friday itself being NFP, you're really doing nothing. I think you guys can all testify that On some Fridays, some NFP Fridays, you literally see price do nothing. Like price would just maybe spike up a little bit and just chill around there, not do anything the whole day. Unlike it used to do back in the days, especially with what CPI does now. So yeah, I am not expecting much fireworks, to be honest. Let me not say I'm not expecting much fireworks for NFP. I'm going to position myself to take any trades whenever the formation does form. If we get a Monday, Tuesday, and Wednesday that's accumulating, then most likely we're going to get an expansion day on Thursday and Friday. So that's my expectations for the week. This is what I'm looking for. When we go down to the hourly time frame, I'm going to remove this daily gap for a second. Actually, let's first put this up. Right here on the daily. Throughout the week we were bearish, and here this gap to the downside was the overnight news report being released by, I think, NVIDIA, and more specifically we have the inefficiency that was made as we displaced lower from that candlestick's low to the candlestick's high. That's the CB that was created. When we put that out in price, we notice how price returned down to use it as support to push higher. When we enable, I'm just gonna enable this indicator for last week. We can see this was the midnight opening price during London. Price opened up, pushed up, came down into short-term discount, then continued higher. You could have skipped this whole day because we didn't really get a clean setup on the 1 hour chart. And then on Friday, even though it came later in the day, we got a trade down below midnight price, right, coming down all the way to the same inefficiency that was made overnight during the NVIDIA news, the financial data release or something. We retapped it on the lower time frames, like the 15 minutes. We actually got entries. We got a retest of this BC, right? We actually got a liquidity sweep of a week low right there. A retest, continuation, second fair value gap. If you are not too sure about the first, that could have been your entry to take out that buy side liquidity. But most importantly for me, I would be aiming for the relative equal highs right here. We've built so much liquidity in that area that I believe we might actually run this out during Asia or London session as we open up. So right now on the 1 hour chart, we have created an inefficiency right here. I believe this inefficiency could act as support. We could trade on into it, act as support to clear these highs. And I would not be shocked if this becomes the low of the week. I would not be shocked if price just continues higher and higher from there, because we have so many unswept liquidity as we saw from the higher time frames. So many failure swings on its way down. All we've been doing is taking out people that were buying here and they were trailing their stop losses to previous lows, right? They kept on getting swept. They kept on getting swept. Wherever they kept their stop losses, other ones kept on buying, and they kept on getting swept up until that we failed to sweep this low, tapping into this inefficiency. And now many people most likely would have had their sentiment shifted. They might think now that we are probably bearish now. We've broken multiple lows to the downside. We have created a strong area of resistance, right, or strong area of supply or demand, whatever it is, whatever people use to actually take these trades. They might think all these things, and now we are probably going to be bearish in their opinion. For me, I think this is just a way for smart money to cripple the hopes they had on being bullish. And finally, I believe we're going to find an expansion move to the upside without much of a retracement from here. I believe we'll find something like this going upwards without much of a retracement. Any retracement might be to just clear a short-term low of some sort before continuing higher. So I will be looking for a trade even during Asia. I'm being transparent with that. Then when we move to S&P 500, another thing I found interesting was notice how even though the S&P 500 was the stronger one of the two sisters, we still managed to clear. Actually, we have that buy side liquidity there, which is again more likely to be tagged very soon than later. So we respected this inefficiency here, right? This BC once before. I believe we probably would have thought price would have run the highs by now, but we came back to it, cleared the previous week low, a weaker low there, and now expanding higher. But notice how when we look at NASDAQ, this low was actually made on the 29th of August at 2 p.m. while this one was 30th of August at 10 p.m. When we switch back to NASDAQ, this low 2 p.m. and that low 10 p.m. So what do we have there? A clear SMT divergence. Again, if you don't know what an SMT divergence is, I'm going to link a video up here in the corner to show what I mean. And this is an SMT divergence on a 4-hour chart. That indicates to me that we shouldn't break this swing low right here, this specific low on the NASDAQ, if we're going to continue higher. And I believe this low would not be swept until that high gets ran. This is not financial advice in any way whatsoever. This is just my opinion and what I would like to see and what makes sense to me based on the way I read price action. So I'm looking at that sweep of liquidity on S&P 500 as a nice SMT divergence to continue higher. SMT is more likely to clear, S&P 500 is more likely to clear that buy side liquidity, which is the all-time high, than NASDAQ. So we could use fib projections to measure where the 2.5 and the 4 standard deviation levels are. I'm going to measure from the high that was made when we started accumulating to the low of the manipulation, because I believe this sweep to the downside was all manipulation for us to be back here again. This to me was manipulation, a quick run to the downside, a quick run up to the upside. That's the definition of a manipulation in my opinion. So when we modify this fib, let's remove the 0.5 level and let's enable the 2, the 4, and let's make this the 2.5 there. So in my opinion, even after we clear the all-time high, we are likely going to hunt this area next. So I'll be looking for the 5,800 level on S&P 500. 5,800 psychological level. Let's label that now actually. Right there. Set an alert for it. So yeah, and then of course if we get really zealous through that area, we're likely going to aim for the 6,000 level, because that's where the 4 standard deviation basically is. It's 6,992 and the 6,000 level is just above it. So it'll be really something to see the S&P 500 costing $6,000, but not something that's completely unexpected or shocking. So I'm going to take out the fib now that I've got in the fib extensions. And yeah, on S&P 500 we have the same BC. I would look for a retracement down into this, then a push up to the all-time high. But of course before the all-time high we have this clear buy side liquidity that's just here. But yeah, if we are going to push down a lot, I would watch for this breaker, this last bullish candle before we fell off to take liquidity. Let me actually do this also. SMT. So yeah, this is to me a clear textbook setup. If we're going to run the fibs again with this manipulation leg, like so, we can see that the 2.5 aligns with the all-time high. So this to me again is a clear textbook setup. I would look for buy setups or buy entries inside of this area, inside of this 1 hour fair value gap. So yeah, that's my expectations on the indices. I'm still looking for higher prices. Now let's move over to the dollar. Actually, I think we can do this. On the dollar, for those that have been following me closely, you would know that I'm looking for lower prices. I was actually looking on a very high time frame, which is the yearly fair value gap. I believe that's probably the first PDRA that I mentioned on the dollar this year. And considering how long I've been waiting for it to get tagged, I think finally we're gonna run those lows. When we go to the yearly chart, removing this line, we can see there's some of those for now. On the yearly chart, you can see where we opened up this year. We actually traded below the yearly opening last week or the week before, but yeah, opened up this year, pushed up to that high, and now the only thing I can see us reaching to is the inefficiency residing here. So yeah, as we know, price only moves to two things: liquidity and inefficiencies, right? So in my opinion, I believe we're driving down into that inefficiency. What we do inside of that, I'm not sure. Are we going to use it and push up? I do not know. We could. Are we gonna break below it, close below it, and then continue driving lower on the dollar? Who knows? We could. That's not outside of the realms of possibilities. So yeah, my drawn liquidity is the yearly gap. When we drive down lower to the quarterly time frame, we can see there's a specific discounted level on the quarterly chart, which is the lower half portion of the yearly gap, and I believe we can draw into that level there. So basically the 98 flat level is my drawn liquidity on the dollar. Going down to the weekly time frame, we've been pushing lower, and there's something very interesting about this weekly gap that we just created. Firstly, it's a fair value gap that broke a swing low. That to me is a high probability fair value gap, the same way we did here. The difference here is that we didn't come back to retest it. It would have been nice if we did, but we didn't, right? But yeah, a weekly fair value gap that broke a swing low. I say this is interesting because when we go down to the daily time frame, we have the same situation going on here. We have a swing low that broke a fair value gap. Oh jeez, pressing the wrong buttons. Why is that my focus and not this lower one here? Because we sort of had the same situation down here. Well, because I measured the range. If we measured from here, from that swing high to the latest swing low, that's the fair value gap that I see in the premium. If we decided that no, well, technically that's not the last swing high, this is the last swing high, well, that's fine with me, because I'm gonna measure that swing high to the low over there. It's still the only fair value gap that's in premium, so above the 50% mark. It's the only one that I see. So if you are asking me for a drawn liquidity, we are possibly going to draw into that premium gap before seeing a continuation down. Let's put some sort of alert there. So I'm looking for a move like this: push up, maybe consolidation in the first week, then a continuation lower going into the second week of the month. So yeah, that's my drawn liquidity on the dollar. So of course it will be the opposite for the pound and EU. From the pound, we have a very interesting situation. We've got a liquidity sweep here from the monthly perspective, right? We've been respecting bullish PDRAs this whole time. Yes, we've gotten multiple instances where we got a liquidity sweep of a previous low or something of that manner, but overall we've been respecting bullish PDRAs. Over there we actually created a BPR that price came down to and respected, continuing pushing higher from the monthly perspective. Right here we also got another liquidity sweep, as we mentioned, just like we did over there. Swept a swing low, tapped into an inefficiency, and what did that create? A high probability order block, which is very interesting. I consider this a high probability order block, obviously, because we swept liquidity, tapping into a high time frame PDRA, and shifted away from it immediately, closing above the previous high. So when we did that, let me change this to a different color. When we did that, we would expect that the next month, when we tap into the body of that order block, we should expect an immediate reaction away from it. So the next month we had a bearish month, but that was all just to tap into the opening price of this candle, right? So we made the low there. We gave a second chance in the month of July, and immediately price tapped it. We just ran away quickly. Now, what did that create when we ran away quickly? We created a proportion block. So this next order block is a specific type of order block that's called a proportion block, where if price taps a proportion block, we expect it to run away very quickly. And we did exactly that to clear this high. We did exactly that to tap into this premium inefficiency as well. So I found that interesting. And I don't find it too surprising that we are reacting away from that inefficiency right now. I don't find that shocking, but I don't believe that the run to the upside is over. Of course, the monthly candle is closed now. We're having a new monthly candle. One thing I would not be surprised when the new monthly candle prints is if we have some sort of an immediate rebalance. If you know what an immediate rebalance is, you would. If you don't know what it is, it's basically when price opens up and taps the previous candle high, like in this case, without creating any fair value gaps between the two of them. If we get something like this, I'm definitely going to be in on the swing positions to take price to that high all the way up there at the 1.43 level. So that's my drawing liquidity on GU, and that will be my focus for the remaining portion of this year. I'll just be looking for long opportunities to buy GU. Let's go down to the weekly time frame to see if that line is anything significant. Well, without actually doing a preparation ahead of time, I already see that it is a significant level. It's another situation where we got a swing high that breaks, a fair value gap that breaks through a previous swing high on a weekly perspective. So we are likely going to tap into this weekly gap, and we're likely going to tap into that swing high. Let me just do that. And yeah, I'm expecting us to tap into this inefficiency, then continue higher from here. I don't know if that makes sense. It's as simple as that. We can even see the bullish respect of PDRAs. The respect of bullish PDRAs after sweeping liquidity levels, inefficiencies, gaps, discount, push up. Expecting the same situation here, but a quicker reaction than we did here, not a deep retracement like we did here, because this one really went down to the discounted gap. In this case, we have a discounted one again, premium one again. I'm expecting a quick push up away. So if we measure the range, I don't even expect us to come to the 50%. We might come as low as the bodies of this area, because that's a mitigation block. We failed to take liquidity here at the lows, so it's a mitigation block. We might come as low as that, sure, but I'm expecting us to anywhere within this fair value gap push up. On the daily, let's remove this. On the daily, I really do not want to see a discounted retracement. I really don't want to see us retrace. We might get exactly at the no, this is not even accurate. I don't want to see us trade this deep down into discount. I don't want to see them give that much of an opportunity for an entry. So yeah, I'm looking. Let's fix that. Yeah, I'm looking for a retracement to any of these two levels, then push up from there. That's my outlook. Nothing too fancy here, I guess. On EU, I'm looking for exactly the same thing. I'm not going to go into a deep dive on this. I prefer GU over EU because it's the stronger of the two sisters, and it's the one that made the most sense to me on a high time frame, like the monthly. EU is so far away from that high that we're looking for on GU. You can see how it was not too clear on whether or not we were expecting bullish arrays. Like, look at the same BPR, for example. We closed below it twice, making me think we will be bearish. We haven't even cleared this swing high that GU has already cleared. So I'm looking at a very high time frame, not very, but relatively speaking, high time frame perspective. That makes me think I should just put my focus on GU for now. But yeah, the same idea here. Watch this weekly gap as an area of a possible reaction to the upside. If you are an intraday scalper or an intra-week trader, you could use that gap as a target. So say, for example, the 1 hour perspective, you can see that we're still a little bit away from the gap. So you could look for a possible trade up from the Sunday opening price, trade up, lower time frame entries to sell this thing off. On the 4 hour chart, we do have an inefficiency that's very small, but it's there. So small, I have to do this. There, we could see a retracement back up into that inefficiency, a possibility, but probably not likely, and then trade down. This could be a trade of the week, and you could call it a week. You could even call it a month if you really open your size in this. But yeah, from here, I would watch for a possible reaction, shift in structure of some sort, SMTs obviously, at the internal liquidity levels, and I think this is already sufficient for EU. But yeah, the likelihood of getting there before GU is slim, so I'll focus on GU for now. And yeah, that's my outlook. If you're interested in anything else, just let me know. But I believe the majors are back in play for this season, and there's no need to be on exotics for now, just for now. Russell, being part of the indices, I'm also bullish on this. Still looking for highs. I don't know if this is the all-time high. Okay, it is the all-time high. We might also find the all-time high on Russell, but knowing how consolidative it is, I'm not too hopeful on that. But on the daily, so far so good. So far so bullish. Cleared liquidity there at the lows, supporting bullish prices ever since, and now we have that high there, but I'm paying more attention to this opening price instead for other reasons on a lower time frame. On the daily, we also created a swing low inside of a BC, so I expect that swing low to hold, and I don't expect us to trade down sweeping any liquidity. I expect a continuation higher. On the hourly perspective, we do not have a liquidity sweep also, just like the NASDAQ. So we got the same SMT going on there with ES. And yeah, looking for higher prices. I think this high is possible this week. Let's label it as like that. So yeah, that's my outlook. The same inefficiencies, the same trade setups. Looking for higher prices here. We also got internal sweeps of liquidity. Alright then, that's all I have for now. If you have any questions, feel free to ask in the comment section below. If you have any suggestions, if you have any arguments, I'm open to anything. Just let me know in the comment section. For now, happy new month. Stay safe, good luck, and of course, good trading.